As we wrap up the year, let's pick the brains of some of South Africa's investment managers. Many of them you've seen on your screen discussing various market developments. Today we'll be looking at Patrice Rassou's perception of the market, his investment strategy and more. He is, of course, the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. It's been quite an interesting year, and I'm curious to know, at the start of the year, going into 2021, what was your investment strategy and to what extent did the events of this particular year force you to kind of change the way you were doing things and the way you were, I suppose, deploying investments?
Greetings to you, Nastasia, and to your viewers. Yes, this year has been a topsy-turvy year, but it was really one where the South African economy was recovering from the lockdowns of the previous year. So it was really about a normalization of the economy and really businesses getting back to a more normal trend of operation. And we've seen the JSE really into a very strong rebound. So into this year, we were quite bullish given very attractive valuation, the economy reopening, the Reserve Bank being really supportive in terms of keeping interest rates at 50-year lows. And the global context was also quite positive, with the Federal Reserve and other central banks flooding the markets with liquidity, which supported a very risk-on environment. So we were positioned for growth and for a recovery of markets at the beginning of the year.
So as you take stock with your team, how would you say the performance of your funds have been so far?
Yeah, we've had very strong performance. We measure that against CPI, and we've got CPI plus 5 targets in a lot of the more growth-oriented funds, and that's really beaten all expectations. If I look at the all share up 25%, that really takes the cup. I just want to show your viewers that's one of the best performing markets around the world. And if you look at the context, everyone was very bearish about South Africa, and we've really beaten emerging markets. So we're quite glad having a constructive view of South Africa, especially versus other emerging markets, have really done very well for all our investors. And that's a big positive for the year.
On that note then, let's pick up on what has been the biggest surprise for you as you look back at the year that was.
Yeah, the biggest surprise is, Nastasia, is how resilient the markets have been. If you think again, lockdowns, the previous variants of COVID, going into the end of the year with Omicron, the riots in KZN and parts of Johannesburg, the whole political uncertainty around the elections, and yet we've had markets ticking up. And more interestingly, if you look within the JSE, which was up 25%, you have small caps up almost 50%. And that in a context where emerging markets have been struggling. China is down 13% for the year. And we often look at China as very connected to our economy, given that we export most of our commodities there. We've really broken away from the rest of the emerging markets. And it was a difficult context. You just have to follow the news in Turkey and see how the lira there has come under pressure. The rand has come under a little bit of pressure, but our markets have held up very well.
The one thing you do mention on the back of that essay, small cap, in terms of how that has performed on the JSE, what was quite interesting, and you sent me this particular note, was that the worst performance was the SA bonds. What contributed to that?
Yeah, that was a bit disappointing. I think one is the global context. Inflation globally has started to tick up, and you would have heard a whole debate from the Federal Reserve Chairman whether inflation would be transitory, and then more recently he decided that maybe that will be more embedded in the system. So you have U.S. inflation, for instance, at 40-year highs at 6.8%, US PPI more recently printing at 7.7%. And I think investors globally are concerned that with the removal of liquidity, bond yields will start to kick up. And unfortunately, while our real yields are very attractive, meaning the difference between the yields that you get on government bonds and inflation in South Africa, it seems that global investors have withdrawn money from our market, from our bond market, and from more more widely withdrawn money from global bonds. So unfortunately, I think we've been affected by events beyond our shore rather than fundamentals of what was going on within the economy. Because if you look at the medium-term budget, I think it was a very constructive budget. If you look at overall the debt level that has been printed is better than what most analysts were expecting in terms of the South African budget. So I think that's been the one disappointment where asset bonds offering extremely high real yields, even on a global level, have underperformed.
Okay, so let me put you on the spot here as the Chief Investment Officer at Ashburton Investments. Investing amid Omicron uncertainty, amid a Fed that might turn hawkish even quicker than they anticipate, where are you seeing value?
Yeah, it's a very interesting question, Anastasia. We see value in emerging markets. We've been looking around. These have underperformed, as I mentioned already. So if you look at the gap in the performance, emerging markets up a few percentage points, the US up 37% for the year. We think this is where we're seeing opportunities. A market we like within that emerging market universe is Indonesia. They have strong growth. They seem to have conquered COVID. Very good in terms of managing their budget also. So we think there's select opportunities there in terms of emerging markets. And then we're looking at selected shares within the broader universe which have been left behind, because really the big increase that you've seen in terms of the US markets have been driven by a handful of shares, like 5 shares. There are many other stocks which haven't gone up as much, which we feel offer very good value.
China has also been a story as well in 2021. Some analysts saying it's been a really tough call in the sense that everything that could go wrong with China actually went wrong. Do you think that next year could be slightly different, or is the story more or less likely to be the same? I mean, what's your view on China going into next year?
We think we're close to the bottom in China. If you look at the Reserve Bank there, or the PBOC, the People's Bank of China, they're cutting rates, whereas there's fears that the US might raise rates. I think on the other hand, we've seen valuations being depressed. You see a lot of the tech companies trading at half valuations that we see in the US. And the whole common prosperity policy, while there's a little bit of difficulty in terms of the transition and uncertainty, longer term, the government there does want the broader population to benefit. And I think the long-term growth picture for China remains intact. So that's where, again, I think into next year, we feel that there's opportunities that we can capitalize on if you look at the Chinese market.
Before I let you go, the biggest risk going into 2022 for you?
Yeah, the biggest risk remains policy error by the Fed, central bank being a bit too hasty to withdraw liquidity or starts to hike rates in the second half of the year, and then growth disappoints. I think it's a fine balance. Like, you have central banks trying to keep inflation under lid, especially in the developed world, while making sure that growth doesn't collapse. And that's a very difficult balancing act. So there's always a risk of them being too hawkish, withdrawing liquidity too quickly, and growth suffering as a result. And we'll have to watch that.
Patrice, thank you so much for your time. That is Patrice Rassou, the Chief Investment Officer at Ashburton Investments, giving us his perception of the market and his investment strategy.